Good evening, ladies and gentlemen. Today is the 19th of April, and the trend of Black Mondays continues. Today we gapped down almost 300 points and then cascaded further from there, breaking our recent swing lows, heading below 14,200. And from there, made a 180 and started heading back up again. So it was a day where it was not very good to sell strangles as such, because there's a lot of IV spiking in either direction, and the problem with such a large move on the Nifty is that we've seen far too often that there can be a counter move of equal proportion in the reversal direction in case people who have shorted at a very bad risk reward start to cover those shorts. So it was not a great market to either go short or long. I don't particularly think anybody who bought or sold options generally would have made money. It was just one of those days where nothing happened, nobody made money, most likely. So that being the case, it was not a great day for strangles. I managed to end slightly in the green after covering charges and whatnot, but it wasn't particularly a great day for strangle selling, despite knowing that Wednesday is going to be a holiday. So which would mean that either tonight a lot of OTM premiums should erode, or at least by the end of tomorrow, because Wednesday is a holiday and Thursday is the expiry. So that being the case, I hope you have a nice time watching this video. My trade book is also available on the Telegram channel. Please do check it out if you want to scrutinize the trade a little bit more in detail. Thank you so much for watching. Have a great evening. And just to add, I got a few messages of people who've taken positional trades and they've sold puts, and now those puts have gone through the roof, and they sold calls to balance those puts, and now on the reversal the calls started bleeding. So right now my only suggestion to people would be, don't do positional weekly trades. Do it in the monthly. It's just much better risk reward. And secondly, in case you are stuck in a very bad position, rather than trying to now aggressively fix that immediately by taking counter positions, I would suggest you just carry forward that position. So if you've sold a 14,500 put and it's deeply bleeding, if you've lost about, let's say, 50 points on it, try to get 50 points in the weekly expiry of next week or the month-end expiry, and you will get so much more space to work with. Thank you so much for watching. I hope your trades are all right, and I will catch you.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The pre-market has just settled and deep red on everything, more or less. Some of the big names opening near their support zones, but showing a massive gap down at this point. This is why overnight positions have become so unattractive. Looks like we might have one more of those repeat Monday situations. What is happening is we are now going to be opening around here, below this. And that could lead to a lot of shorts getting covered because they're in good profit, or it could lead to further unwinding. And if we break down and make a new low, that will be quite dangerous. We don't know where the next support will come in then, because the only thing visible after 14,000 will be 13,500. So the idea will be to let the IV spike and sell put options somewhere close to 13,500, 13,600. And also take in call side credit. So should be an interesting day. Will not be in a rush to enter into the position today. The idea will be to wait for some sort of support to be respected before entering for the day. US markets ended on a great note on Friday. Asian markets more or less in the green. It's just our COVID cases that is leading to this kind of a panic. Fair enough. Most likely we will still hold this support, but in case we don't, then that should be a situation where at least leveraged long positions start getting cut to a certain extent, and dips below 14,000 or towards 14,000 are a great time to buy in cash. So there's about 2 minutes for market to go. We're gonna assess the situation in the morning, and then okay, some stupidity right now. I'm placing orders, but they are getting stuck in some kind of validation pending situation. Very odd. So I place a market order I get stuck in validation pending. This is not at all a good sign. Okay, not sure what's happening, but I'm not going to trade until there's some sort of stability in the platform. Okay, I think more or less should have exited. Okay, we'll wait for some stability in the platform to return, and then we'll take whatever trades. Okay, so after some stability, have now entered the 14,700 put short and 14,600 call short. The idea here is we have far more room on the put side, and since there's a massive IV spike, we've kept our distance on the put side quite wide. The Reliance has opened at a support zone of 1900 and now made a down move. IT is moving below 26,000 and Bank Nifty potentially below 30,500. We are still at support zones, so it is not something we can consider a free fall yet, and we are 2.5% down. The idea will be I'm liquidating some Bharat bond and will be buying Nifty base towards the end of today, not with all the quantity but part of the quantity. So yeah, Strangle has entered. These options have to expire on Thursday. Tomorrow is the only trading day except for the expiry that these options will be alive, and right now this Strangle is looking quite attractive because the range is massive. It is 900 points, and with one trading day to go for expiry, and 900 point Strangle is available for 55. So that being the case, should be an interesting day. We'll see. Once again, we are at a very strong support zone on Nifty, something that has acted as a bottom twice, and now we're testing that again. So it'll be interesting to see where things go from here. We'll keep you posted. Time is 9:35. Okay, so 30,500 on Bank Nifty is acting as some kind of support, and we are holding the 14,200 support zone range on the Nifty. This is why a lot of the IV spike that was there on the put side has started to come down. Today's position, the margin used is about 1.8 crores. I'm transferring funds from a different account, shuffling around. So before my complete margin is available to me through all the pledging route, I think it will be next week. So it will take some time. But in the meantime, it's good that that position sizing is very easily manageable on a day where volatility can be high. So time is around 10 o'clock, and yeah, a lot of the put side IV has now fallen off. Regardless, these puts still have great amount of value in them to hold. The idea is in a day where everyone is expecting a massive cascade, you have to use that as an opportunity, because there will be a massive IV spike in the morning. People would have bought all kinds of puts at different strike prices right at the open. In the first 10 minutes, you purchased anywhere between 35 to 40, and we use that opportunity to take the other side, because we will have panic sell-offs, we will have panic down moves, we might even test 14,000, but what will happen is invariably that will start looking as a very attractive time to buy the Nifty, and you will have people coming in and buying the perceived value. Because somebody who's on Nifty at 15,500, 600 is like, okay, it's corrected now is the time to enter the market, and that's what you will see invariably. DIIs will buy. Even if FIIs are selling, DIIs will buy. So yeah, that being said, you have to keep a stop loss. We've seen what happened last year. If you don't have a stop loss, you will get killed, absolutely killed. And yeah, more or less the time is 10 o'clock. These should continue to decay over the course of the day. Also, how we positioned our strikes was the call from the spot obviously was much closer than the put is. So a continued down move, even though the put premium is quite high, will actually benefit the Strangle position, because the puts are already pricing in a down move when you entered. So when you entered into a market that's gapped down 2% and continues to move down from there, the puts are factoring in that continued down move, which is what is called cooling off of IV. Once you take stability and then the premium comes down, basically the fear has gone down. Okay, we're seeing a continued up move now, some strength coming in from Reliance holding on to 1900 and Bank Nifty making a 300 point up move. 400 point from the day's low, but 300 point up from 30,500. These calls are slightly starting to expand. Have moved up the puts. The puts still remain 500 points away, and the calls are 300 points away. The idea will be if we start to test 14,350, 360, then we will be moving up half of our calls to 14,650. That's the idea for now. Apart from that, not much else to be changed in the position. Okay, the time is almost 1 o'clock, and really haven't seen anything happen all day. We're not seeing any fall off in prices also because people are stiff. There are a lot of positions building around 14,300, but honestly that means nothing. That doesn't translate into anything. Everyone has this feeling that you can look at OI minute to minute and track exactly what's going to happen. Absolutely false. It's not going to happen. It's not going to give you anything unless you see any big deviance from what a normal distribution of OI is. It will really not give you much. Yes, market has gapped down and fallen. Massive call unwinding, call writing at lower, massive put unwinding, call writing at all levels, whatnot. It will not give you much. So that being the case, it seems like it's possibly attractive to start buying in cash or writing cash secured puts for later months, but even then the premium is not overly attractive. There is a trade that I'm considering. I'm thinking of selling a cash secured strangle on Reliance by selling the 1900 put of this month and selling the 2000 call of this month. That is something for consideration at this point, but nothing on that front yet. So we're now making more or less a sideways range for the day, and we continue to hold this triangle until we make any big kind of break. Okay, the time is 1 o'clock. Absolutely nothing has happened in the past 2 hours or so. We've just held the range, very tight range after making that down move. Back Nifty taking support at 30,500 range multiple times. Reliance somehow barely holding on to 1900. And yeah, really not much happening on the market front. There's not much data to work with as well. Most of the time OI doesn't give you anything. Today is one of those days where you can't make anything of the OI. Yes, there are positions building up around where the current spot is. Yes, we've had a gap down, so we've had put unwinding and heavy call writing. Yes, all of those things are standard. There's really not much to take away. Bank Nifty, good amount of put writing at 30,000, so that is now building up as a support. But similarly, put unwinding, call writing. Most of the time, OI, when it is within its normal distribution, I mean, there's nothing out of the ordinary that's happened here. Will not give you any data. There is nothing here. People like to think that, oh, I saw some position build up around this strike, so XYZ yada will happen. No, not really. Today is one of those days where there's not much data available from the OI. What can you say? Yeah, a lot of people are taking positions around 14,200, 14,300 and 14,250. So a lot of people say, oh, people are taking short straddles at 14,200, 14,250, 14,300. Yes, that's what they will do invariably when that is where the spot is and IV is high, so premiums are really good. And generally looking at later dated or in the monthly, there has been a big amount of 14,300 call writing. But what is this coming off of? This is coming off of the fact that there'll be a lot of puts in the money and they're probably writing this as a hedge. So this big thing doesn't really mean much. So yeah, it's one of those days where OI data is not really giving you much. The IV continues to remain high. We're not particularly seeing any big decay intraday. The idea will be, we've held the range for so long without any decay in these options, that any trending move that we see now, especially towards the upside, will have to set in an exit clause. So the idea is, if we do start making a move on the upside, which I'm really not expecting today, I'm expecting the rest of the day to go more or less how right now it has gone, because I don't see Bank Nifty clearing 31,000 or Reliance making some big move either. So Yeah, more or less that's the plan for now. Our downside move we're not so concerned about because our puts are 500 points away. Meanwhile, one more trade that I am considering taking for this month, and I would say towards the end of the day, is selling a cash secured strangle on Reliance, which is basically, this is exactly at the money, the 1900 put. Plan will be sell the 1900 put and sell the 2000 call. And very straightforward, the idea here is to take delivery in case it expires in the money. So this is of consideration at this point. We'll see towards the end of the day what the pricing is looking like. Okay, so something to be aware of at this point, but still far too early to do anything about, is the up move on IT. So IT is trending higher, the weaker rupee, whatnot, probably safe haven IT. That's why money is going into IT. It isn't exactly a reason to get overly bullish on the index, but some strength in IT relative to everything else, and that is pushing us higher. Now, the issue will not be if we test till here. The issue is if we start heading higher, there's tremendous amount of calls written at 14,400 and 14,500. And if those guys start covering, it doesn't matter what fundamentals are. If you create enough panic, because right now, anyone who shorted the market after the gap down already has a very bad deal. So you shorted the market either through buying puts or shorting futures, whatnot. Got a very bad deal on it. But negative sentiment continues, so they hold on to their shorts. But if everyone starts covering, so the people who shorted here and here, they start covering, then that pushes us higher, and that is where fear should be, towards the upside. It's not of a concern right now because my calls shorted are 14,600, which are very, very far away, so I'm not expecting them to get covered that easily, but this is something to be wary about. So at which point will we start making some kind of adjustments? So if we convincingly make a break above 14,650, 660, that range, and it's convincing enough, then we will move up our puts to 13,900. That is, we'll move half of them and then the other half depending on what the situation is. But for now, more or less, we are exactly at the same situation from a strangle value perspective as we have been for the past 3 years. Okay, the time is 2:10 and we saw almost 200 plus point candle unbanked Nifty on 5 minute. So pushed it over 31,000, pushed the Nifty up as well, and led to quite a spike in the call prices. So exited the 14,600 call and shifted to the 14,650 call, now giving us 300 points room on the call side. Also exited the 13,800 put and shifted to the 13,900 put, still more or less favoring the 450 point distance. This continues to remain a bearish position. A down move will benefit us. The reason we had to adjust is because we are obviously afraid of some kind of big short covering move pulling us back all the way to 14,500, which can be disastrous for the intraday position. So we convincingly broke 14,350, and that was reason enough to risk off on the calls and take additional risk on the puts. For waiting to do that, we basically had to stomach a 2-point loss, but that is natural, can't do anything about that. And yeah, we'll still continue to hold this position because the premiums are great, and should be some kind of unless we have some big short covering move, there should be pretty decent decay. Now if we start testing 14,400, I'm going to completely exit the call side, and at that point just create pull put spread. And yeah, that's the plan. There's no strength coming from anywhere except for Bank Nifty. IT is now slowed down. There's no momentum left in IT, which is why these calls which have expanded by the up move should lose value, and the puts also should lose some value now that we're basically trading at the day's high. Puts should continue to lose. You have to keep in mind all these options are expiring on Thursday, and Wednesday is a holiday, so that's why this is great from a risk reward perspective. We'll keep you posted. We still have an hour and 20 minutes to go. Okay, so this is a classic getting played by volatility situation. Yes, the Nifty has come down, and that's why our position has benefited, but had we held on to the 14,600 calls, these would have lost 6 points, but instead we are holding on to the 14,650 calls, which are losing only 3 points. And now the puts that we have shifted to, they have gained by 2 points, and the earlier puts from the point that we shifted, they have more or less gained by the same, so it's fine. Yeah, Now, one would look at this and be like, okay, so a lot of people tell me, if you just don't adjust your positions, it will do very, very well and you will make more returns. There's one simple, straightforward answer to that. In majority of situations, what I'm doing is going to lose me money, and that is something I'm very well aware of. When the market is going down and calls are deflated, I'm selling calls. And when the market is, or I'm taking more risk on the call side. And when the market is moving up and everyone's getting stopped out of their long put positions, that is when I'm selling puts. So I know it's a bad deal. But the reason I still do it is because that is how risk is managed. At what point then would you say, for example, in this position, let's say you're at the 13,800 put sold and 14,650 call sold. A 50-point move will make those calls gain 20 points and the puts will basically lose maybe 5, 6, not more than that. That's a 14-point loss. And in this particular structure of trading, 14 points is 2.5 to 3%. So that just makes no sense. I am very happy to either get out in case there's a trending move and it's towards the end of the day and there's nothing to be done to control the position, get out at a profit or at a loss, or to each time give up some reward to balance my risk. So that is something that a lot of people I find comment and say, boss, if you didn't do anything, you just took short straddle and kept it exactly like that, or you took this triangle and kept it exactly like that, it would have worked out in such and such way. Yes, it would have, but I think they're having short-sighted memory, because there was a day where we had a trending one directional 600-point move. The video is also there on the trading series, and there was a day where we had 400-point move. A day like that, you will get absolutely wrecked. So I'm always anticipating, like for example, right now I do have a bearish view, but I am afraid of short covering. So I will reduce my risk on the call side if I see that, okay, there is potentially an up move coming. And ideally, I want to do that earlier rather than later. So yeah, I just wanted to put that out there for those who invariably ask that question. Okay, so I had to move down the puts a little bit due to the kind of highway expansion on the put side. So today has been relatively one of those annoying days, even though the range has been perfectly fine. We're seeing overreaction and underreaction in deep OTM option to very small price moves, and because our trade begins and ends on the same day, we have to take corrective action each time. Anyway, had to move down the puts, and now there is about less than 40 minutes to go for market to close. The exit orders are ready and good to go. So we're going to basically have a mark to market stop loss. Today's charges would be something like 0.5 point on the sizing. The idea is we will close in green, and yeah, not exactly a day where anyone could have captured any DK, because yeah, big IV spike. People, in case there's an up move, are afraid of short covering getting triggered in case there's a down move. I don't know what, but the way options are pricing, they're expecting 14,000 to be tested. So that being the case, yeah, just 40 minutes to go. I'll keep you posted. Okay, some last minute shenanigans on the bank Nifty, making a massive up move. So no intention of holding on any longer. Just a waste of a day, more or less. So what happens here basically is that charges for today should be like 0.5 point. We should still be in the positive by 2 points. The hedge has lost an insane amount, so that's not particularly great. But yeah, should still be a break even to slightly positive day. Not a great day, but basically ended in the positive, barely, but ended in the positive. On the margin that was used, it's still about 0.5% return, slightly less than half. Not a great day, got played by volatility very easily, but it wasn't particularly a day that you could have done much. There was a lot of spiking of IV happening constantly. So from an intraday triangle perspective, really not too much that could have done. The fact that we gapped down to the extent that we did, retested swing lows and then made an up move was tricky. My view was slightly bearish, and for that, having a slightly better than break-even day is a good enough outcome. Thank you so much for watching. Have a great evening. I will catch you tomorrow.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.